tonight. Um, as you hopefully know, we're going to be talking about the Nebraska Advantage Microenterprise Tax Credit. We have with us, who will do most of the talking tonight, Regina Krebs, who's a certified public accountant from Clearwater, Nebraska, and Kim Preston, who's the director of the Rural Enterprise Assistance Project, REAP, as a lot of you probably know it as, which is housed within the Center for Rural Affairs. Just to begin with here, I'll just have Regina go ahead and introduce herself, her background, and what she has to do with the Microenterprise Tax Credit.
Okay, can you hear me? I'm Regina Krebs. I'm a certified public accountant. I've been a certified public accountant for 20 years. I've worked extensively with Microenterprise Tax Credit. I've also worked extensively with economic development. I got active in economic development probably about 15 years ago, and worked within our communities to set up LB 840 funds. I've utilized the Microenterprise tax credit in several of our clients' businesses, and have gotten a lot of use out of it over the last few, well, it's been in effect for probably about 15 years. So I'm excited to share some information. Microenterprise tax credit isn't being utilized much anymore, and I know it's definitely something that the legislature is going to be looking at if we don't utilize it any more than what it has been. So.
Great, well, thank you. I'm glad you pointed that out. Yeah, the Microenterprise is quite underutilized. It's a big part of why we're here today, is to hopefully generate some information and knowledge about the program. That's kind of been lacking, I think, for several years, despite the program being, I think, about 15 years old now. So hopefully people get a lot out of that. Kim Preston, do you want to go ahead and introduce yourself? She might only be able to hear her today, but yeah, go ahead.
Can you hear me now?
Yep.
Okay. Kim Preston with the Center for Rural Affairs. I am the program director for the small business program called REAP, Rural Enterprise Assistance Project. And I was on staff when we wrote the Microenterprise tax credit, I guess 15 years ago now. I guess it's been that long. Right now, I direct the lending program, and we do lending to small businesses as well as technical assistance. So we are happy to have Regina with us and learn from her and how we can help microenterprise individuals just the same as she is.
Sweet. Well, thank you very much. Just a few housekeeping notes for participants before we get into the specifics today. You should be muted, so if you have any questions or concerns, you can place them in the chat box. We'll have a designated question and answer section at the end, but if something comes up and you just want a clarification that's related to the topic at hand, you can go ahead and put it in there right then. That's not a problem. You can decide if you want your camera on or not. We'll leave that up to you. We recommend using the speaker view setting so you can see who's talking, but again, that's something that's up to you. So you'll also see mostly me, Regina, and Kim Preston talking, but if you see a few other folks pop up, we have different staff members on the call, so they might pop up and ask some questions as well. So before we get into the specifics about the microenterprise, I thought I might just kind of introduce the topic. A lot of you may know about it already, but the Microenterprise Tax Credit is a Nebraska economic development program. It's under the larger umbrella of the Nebraska Advantage, which is kind of the state's highlight economic development program. And this one is geared specifically towards very small businesses with 5 or fewer employees. It's basically just designed to incentivize them to expand and make it easier for them to put in the needed investment So obviously it's a boon for those businesses who are able to expand and use the credit. But also it helps our state's larger economy. So they're interested in maintaining small business for that reason. It also helps, our local communities, whether in Omaha or in a small town, keep businesses that are important to them, right? Small businesses provide a lot of the valuable goods and services we use. And so it's in the state's best interest to make sure that those stick around. To get started, I just want to ask some kind of broad small business related questions. And I think the first one is, so why is supporting small businesses important to both the larger economy and the smaller economy? I don't know if, Regina, if you have any thoughts on that.
Yeah, small businesses are important in the Nebraska economy as a whole. I think the last numbers that I were able to see, the most recent numbers, said that 20% of Nebraska's workforce works for a company with 20 or fewer employees. However, I think that number probably increases and becomes vitally more important as we move to the rural areas of Nebraska. And small businesses and entrepreneurialism are essential to our rural communities. I see it a lot in our small towns that are just not able to support a large employer. Our entrepreneurialism, our self-employed and small businesses are essential to those economies.
Kim, do you have anything else to add?
Thanks. One of the main things I think about when I think about small businesses in rural communities is the dollar that gets to stay in the community. If you are spending your dollar at the local grocery store, you are helping with the wages of another individual who can also spend money in that community and keep that dollar in your community. Once you spend your money outside of that community, in another business, that dollar doesn't usually get to come back to your community. So helping with that base of your community is super important.
I'd like to follow up with how does a credit like this fit into the larger picture of a small business starting up? I hear a lot from large businesses that are seeking incentives and stuff like that all the time. Is this a regular addition to a small business starting up? Do they have a lot of other resources? What's that environment look like for them?
There really aren't a lot of opportunities for a lot of funding for small businesses, especially your micro businesses. And these, like I said, these play a vital role in our rural areas. If you're looking for, youth to come back to our rural areas, most everything here is rural, farm generated, ag generated. So, however, most of our family farms cannot support multi-generational families. So you're either looking at, from a rural economic development standpoint, either being able to provide outside jobs or promoting self-employment, which I do see a lot of, because in my experience, and as an economic development opportunity out here, if we have small businesses that grandpa owned or dad owned a small business or grandpa owned a farm, I see a lot of those kids that are much more willing to take that risk to create their own job opportunities. Starting your own business takes a lot of guts, and sometimes if they see someone that's been successful in that, they're much more willing to take that risk. But there aren't a lot of other, but it still takes that monetary investment. So I think there could definitely be some possibilities to leverage, like your microenterprise tax credit and some of your other local opportunities. But they definitely are, a small sector of what's available for small startups.
One of the greatest uses, I think, of this tax credit is to help with hiring an individual and using that money to help with the salary that the small business finding jobs in small communities is hard. And with that incentive to use part of that tax credit towards the salary of a new employee really does help the community. Again, bringing it back that dollars get spent in that community, and that community gets to keep moving on forward.
I totally agree. You know, when you're looking at a small business that you've operated, hiring an employee for, full-time employee or whatnot, it becomes a huge jump as a next step in that small business. And being able to leverage, 20% of that salary definitely helps with cash flow, and it makes you a little more willing to go out and make that investment in an employee.
And it lets that employee start generating some revenue within that business to help make their jobs more sustainable.
Correct. Yep. Definitely agree.
I don't know if either of you would know this off the cuff, but Kim Baker asked in the chat if you know how many times a invested dollar turns over or respends in a small community. I wish I had an exact amount off my head, but
That would be cool to know. I do think there is like a percentage of the dollar if you spend it locally, there's a percentage of it that's close to 50% that gets to stay, but I can't remember off the top of my head what it is, but I know there is something out there. Sorry, Kim.
well, that was a good effort anyway. Maybe we can find a number.
I'll keep looking.
Okay, so I think we're going to start digging into the kind of the specifics of the microenterprise now. Regina's maybe the expert here who's done a number of applications. And so just to start out with, what are the application guidelines for the microenterprise tax credit?
Yeah, so the application, well, I've got a couple other things. Let's just start with some quick terms, differentiate some quick terms. Nearly every new business owner that I talk to or comes into my office or that I've talked to through economic development wants to know, where can I get the business grants? The free dollars that's out there. In very few extenuating examples, there are very few examples of true grants out there, COVID being one of them this year. But I think this program is as close to a grant as we've seen. However, I think just because it's called a tax credit, I think this option gets dismissed too easily. The microenterprise tax credit is a 20% refundable tax credit from the state of Nebraska for new or expanding micro businesses up to $50,000 worth of expenditures. Refundable being the key word, especially for a lot of our small businesses. If you spend $50,000, you get a $10,000 tax credit back. If you spend $20,000, you get $4,000 back. And like I said, this is refundable. So if you don't owe the state of Nebraska that much in taxes, you basically get a refund check for that particular credit. How do you qualify? First of all, it is for micro businesses. That means that you have to have 5 or less full-time equivalent employees. That is basically calculated off of how many hours a week do they work. So you're really looking at less than 200 hours a week in your business. The credit is claimed at an individual level. So that individual must be active in the day-to-day operations of the business. You must be working or providing management or management decision-making. So no passive activities are allowed. If it's a passive activity at the federal level, it will not qualify for the micro enterprise. If you have employees, you must be set up to e-verify prior to the application, and you must use it during the attainment period. You must also be fully licensed for all applicable Nebraska state programs. So if you're subject to sales tax or withholding tax or whatever, you must be licensed in those particular state tax programs. And the final one is no immediate family member has previously claimed the credit. There's also some limitations for specific businesses, farming, ranching, and realtor businesses, but those are specific limitations. So.
What are some typical business investments that you see, or is there a theme that a lot of businesses use, or is it kind of just vary a lot by the business?
It does vary a lot by the business. I've utilized all of the major categories. Your major categories are an expansion or expenditures in fixed assets, so any type of a machinery, equipment, building purchases would be included in that depreciable asset, everything except motor vehicles or licensed vehicles, repairs and maintenance, advertising, legal and professional fees, and net lease increases. So increases if you lease your facility or you lease a building or that type of thing. And then obviously your wages and compensation in addition to health insurance for employees. And I've seen it used in all ways. Most recently probably has been really just the facilities portion of it. The last probably half a dozen that I've done have really been building related. Either they've purchased a building, built a building, or renovated a building, and typically they get to that $50,000 relatively quickly.
Is there a cap on the wages or how much you can pay an employee before it doesn't count anymore, or a minimum threshold that you know of?
There is a minimum threshold. I don't know those numbers offhand. It's right at $1,280 a week or somewhere close to that. I'd have to look up the exact amount, but if you pay them over that, then yes, that would be a threshold.
Okay. Could you also talk about how a new business starting differs from a continuing business? And then also say if someone buys out an existing business, does that change what your reporting looks like or what your base year investments look like?
Yeah, it definitely changes your base year investments. If you're an expanding business, you have a base year investment in each one of those categories. To expand, you have to take your base year your base year expenditures, and you have to increase those in either of the next 2 years by the $50,000. So if you had purchased $10,000 worth of machinery in your base year, you'd have to purchase $60,000 worth of machinery in order to capitalize on the entire $50,000 increase. If you're a new business starting up, the base year basically becomes zero. So you really do get to start from $1 or from $1 in reaching that $50,000 threshold. Purchasing a business gets a little more complicated. It typically goes back to the original business owners. Information. I've done a couple of those. They get to be exponentially more complicated. Number one, because you're typically relying on their information. Number two, it may or may not be applicable. One business that we just had purchased, they only purchased one of the two lines of the business. So A, the business owner wasn't willing to release their prior year information, and B, it wouldn't have been applicable anyway because they had both business lines combined. So by breaking out that one, we really didn't have a good base year that we could go off of. So we had to do some additional tax planning to make their credit work for them.
Diane had a question here that I think relates to what I was going to ask. She talks about someone who's an independent contractor who doesn't have a payroll, or a lot of people, I think, get confused if someone is just working by themselves in a business. And I was going to ask if the business type matters, like a LLC versus a different corporation, or those type of legal titles.
The legal entity itself, I haven't seen where that makes any difference. The biggest hurdle is just that you're actively involved in that micro business. So I've had sole proprietorships, LLCs. I've had one corporation, a couple of corporations. So the entity isn't near as vital as the other qualifying factors.
Can you, so I know that there's a limitation on agriculture businesses. I forget the exact number, but when that was instituted a few years back, it's probably been a number of years now, the applications declined a lot. Do you have any ag businesses who try to apply? Do they often get booted out, or do you not deal with that as much?
Now, I dealt with that extensively, and I remember the day that got changed. Actually, it went when we had ag businesses, and it was the first part of the tax credit too. So we had a lot of ag businesses that qualified for it. Really, I think those funds were really handed out within days of the end of the year, and they were maxed out. We had a lot fewer funds though too. I think the funds that were allocated were right at $1 million. This year we're up to $4 million. But yeah, I think as the years have went by, more and more of the eligible individuals have applied for them. And with the family limitation, like I said, a lot of our entrepreneurs and self-employed individuals really lend that to their kids and their relatives becoming self-employed. But when we use that credit once, that wipes out any siblings, any parents, and any children of the applicant can no longer qualify for that, even if they're not involved in the original business to begin with. But no, I did see a lot of farms, just simply because of the nature of farming. You know, $50,000 doesn't go very far in farming asset purchases at all. The limitation right now is really for your beginning farmers or extremely small farmers. You have to have a net worth of less than $500,000 in order to qualify, but it is still out there and it's still available. I mean, I think there's a lot of beginning farmers that could still utilize this credit.
I've heard some people say that applying can be kind of cumbersome. Is it different than other programs in any way? Is it about as tough as like applying for a loan, or what kind of difficulty level is it to apply?
It depends on the situation. There are situations or companies that are easier to apply for than others. If you know, the additional hoops to have employees with the E-Verify program and to get qualified for that and set up on that, makes employees just a little bit more difficult. But really, to apply for really isn't cumbersome. You just have to have your plan in place. It certainly isn't any different than providing, it's actually a lot easier than providing the information for banking or lending, where you're going to have to put together a full business plan. You're going to have a plan for this just a little bit. You've got to explain, how are you going to use the funds? How are you going to grow the economy in your local area? How is it going to help maintain economic development in your area? So there's a few questions that you have to answer, but really, I've always taken the stance that I can answer a lot of questions for $10,000.
So say someone wants to apply and they approach an accountant. Is it just mostly employee information and previous tax forms and a rough business plan that they need to come with? Is that about it?
Yeah, you need to have your prior year tax returns for both the business and the individual. Obviously, if it's a new business, you would just provide the individual's prior year tax return. And then a basic plan, because you have to fill out a chart with your base year in it. So that would come off of last year's taxes, or it would be zero in the case of the new business. And then you have to just put how you intend to increase those. Do you plan on spending it on depreciable assets, net lease investment, advertising, professional fees, that type of thing? So that's really what you need. Like I said, there are several more pieces of information if you're an existing business with existing employees. Then you need payroll registers and proof of E-Verify. But for the most part, most of my applications that I've done are pretty straightforward.
Michael asks if someone should apply on their own or if seeking help from a CPA is maybe preferred.
I don't know how to answer that. I filled out so many of these. I can do them relatively easily. So, the application guide, there's a good application guide on the website that I think if you really follow through and go through the application, I think it's something that you could walk through. Where tax professionals or professional can come in, with some good information is, like I said, this thing is very date driven. So I've had a lot of businesses. Well, I just had one here last year that came in the middle of October. They had just purchased a business the year before. They hadn't done much except run the business in 2019, but they wanted to put in some repairs and maintenance and purchase some new equipment. And they had their contractor scheduled to come in like the 1st of December to start in on those repairs. When I got to talking to them just a little bit about what they wanted to accomplish in this expansion, it's like, if we hold off until January 1st, we can, I guess I call it clearing out those expenditure items to create a lower base year for them. And then from that point, if they held off until December or January 1st, then all of those additional repairs and maintenance could go towards that particular tax credit as opposed to being added to a base year. So there's definitely some tax planning strategies that can get involved if you've got an existing business.
You kind of touched on it a little bit there, but so there's a deadline of November 1st, I think, before it starts into being counted as a new tax year. Do you know how that kind of works? Or maybe explain again.
Correct. So up until November 1st this year, basically your base year is going to be your 2019 tax return. So if you've expanded in 2020 based off of 2019, then you definitely have an opportunity for another, 4 days to do an application and to still count your expenses in 2020 and go ahead and just apply for those. After November 1st, however, then your base year becomes 2020 and all of your applicable expenses have to be spent in 21 and 22.
Is 4 days an unreasonable amount of time to apply, or is it still doable?
Still doable.
Well, that's good to know. When it comes time to actually claim the credit, are we just holding on to an invoice from a contractor or receipts? Is that about it? Or is there a lot more to it?
So again, it depends on the type of application and the type of credits and expenditures that we're looking at. But yeah, receipts. Keep your receipts for everything that you expend on it. You'll also need any payroll records to prove up hours paid and that you haven't went over your 5 employees. You'll need any lease contracts that you've signed throughout the year. But yeah, receipts. And then it gets a little more complicated. Like I said, we've kind of run the gamut, and I've done everything from, a small business owner that purchased a brand new building for $75,000. It's just the purchase contract, you send it in, it's clean, it's simple. I've also gotten involved in one that I'll never do again, but it was a construction project. So by the time you're sorting out $250 Menards receipts because they built it by themselves, it gets way more complicated, and I probably wouldn't suggest doing those very often.
So I only have one more question on the microenterprise specifically, and that is, are there any aspects of the program that if you're an applicant, you should be looking out for that might make you ineligible, or that commonly come up to make someone ineligible, or perhaps make it so their investment doesn't count? I know you were talking about the family members having claimed it before. Does that often trip people up, or maybe some other things?
I've had that happen before, and unfortunately with the tax laws, the privacy laws, you don't always know that that's even out there, and that may be an issue. The brother might have applied for it for their mechanic shop, and their sister's applying for it. They live 200 miles away for a completely different business, and they don't have any idea that each other is looking at claiming that. So that has probably been one of my biggest issues. The other thing is just making sure that you don't go over the 5 employees.
I want to follow up. Does yourself count as an employee?
I do. I count them as an employee.
Great. Anything else you want to say on the specifics of applying or claiming or anything else on the credit?
I think we've covered most of the basics. So unless there's any other questions.
Would you say that it would be wise for someone interested to go to that guide that the Department of Revenue has as kind of a good source to start with?
Yeah, I think so. The application guide really kind of spells things out. Definitely just look through the application itself. I think is 4 pages long. So, just go through there. That gives you a lot of information as far as what are we looking at, what types of information are you going to have to provide in that application. And then the guide is basically a line by line information for each one of those questions. So
Perfect. So I've got a few ending questions. If anyone has questions from the audience, feel free to put them in the chat bar about anything, and we'll get to those in a minute. But also, Kim got back with a good stat for you. She says that of every dollar spent at a local business, 70 cents of it will stay local. So 70% investment retained in your local communities. Pretty good. Okay, maybe no surprise with this question. We've heard a lot about it. COVID-19 pandemic, been going on for a while now. We've heard a lot about how it's impacted businesses. We had the CARES Act, which was now 7 months ago. How are businesses doing? Are they starting to struggle again? Does the microenterprise fit in as a way to help resolve that? Or are people going to be more dependent on other grant programs from the CARES Act? Yeah, do you have any thoughts on that right now?
For the COVID-19, yeah, really, for the most part, anything pandemic related, like you said, is either been in the works or finished already. There are, several specific challenges. The thing is with the microenterprise, it may or may not help, just simply because if a business is struggling just to simply survive this year through the pandemic, there's not going to be a lot of room for an expansion per se. However, that could open up the opportunity that I was talking about, in that you could look at using 19 or 20, as clearing out those expenses if you haven't had a lot of other expenses in repairs and maintenance, or haven't purchased any equipment, and then really looked at potentially a microenterprise tax credit for next year if you're able to keep those expenses in that base year low. So I think the microenterprise tax credit would most likely be more beneficial coming out of the pandemic next year, as opposed to, definitely utilizing it this year. The one exception would possibly be, if you've lost your job or something like that, and you're trying to start your own business, becoming self-employed. There's definitely an opportunity to look at the microenterprise for doing a new startup. So.
Oh, sorry. Kim, I don't know if you have any other thoughts or anything that REAP's doing regarding this.
Other than trying to assist our business owners with the application, we will likely be putting something together that when clients planning for next year, not probably in the next 4 days, but make it part of our normal TA, technical assistance plan, with small businesses that we're working with to assist them in getting through it. I was very anxious about the application when I first opened up the website and printed all of the pages, and I kind of got overwhelmed, and I like to think that I'm sort of in the know of these things, but definitely got overwhelmed on it. And I appreciate Regina's calmness about it. And I think that I think more business owners need to definitely know about it and know that it's not as intimidating as the website makes it look.
Diana's wondering who at REAP is helping with these applications, or who might we refer clients to?
Right now, it could be any of our loan specialists, but right now, Anthony, I think, who's online as well, he's the one who right now has been learning the most about it. So he's prepared. He is bilingual, so he is available both Spanish and in English to help with individual businesses with their applications. I don't know if he's still on or not.
I think he waved. Yeah. Also, if a business owner is looking to expand, what are some good places for them to start? Do they come to REAP? Should they go to their CPA? Should they go to an economic development district? All the above?
Probably where they're most comfortable, but we do have 3 new business development coaches, business coaches on staff who are really learning a lot about building credit towards business ownership, as well as strategic planning, business planning for new businesses, as well as expansions. And they have a lot of really great resources available for new business starts or expansions, or even if you just need to dust off that business plan.
I've got a question, another one from Diane here. Regina, that you might know more about this. She asked, you mentioned waiting until next year. Will the program still be available next year, or maybe just clarify that again?
My understanding is yes, it's been funded again for next year.
Is it merely waiting until next year to actually start the investment, so it gets on the proper tax year, or the base year versus the investment year, I guess?
Yeah, I mean, they'll start accepting applications right after November. It's just anything that is accepted after November 1st will be applied to next year. So, I mean, if you have everything ready to go, definitely, get the application in, so.
Awesome. Well, I don't have any other questions from the group right now, although we've answered a number of them. So I think unless there's anything that comes in, that'll probably wrap it up. I think, some important thing is just, if you're interested or have an interested business, it's really easy to just go to the Department of Revenue's website. I'll have it posted on our end slide for the link to that too. Just read it over. You'll probably be able to tell roughly whether or not your business is eligible. And if you need more specific answers, they have a contact listed. You could probably contact the Department of Economic Development, a CPA or accountant could probably help you out as well. So I think that's just a really good way to start and get, a very basic level of knowledge about it. And remember that November 1st deadline. So if you have any businesses in mind in the future here, that would be a good thing to remember. Oh, we do have another question. So Michael asks, can you repeat the reason for wanting to establish a base year for efficient use of this tax credit?
So it's going to depend on your expenditures, but really you're looking at an additional $50,000 worth of expenses. So some businesses are going to reach that much easier than others, but if you do have a business, a truly small business, I mean, I've got some of them that don't even utilize the entire $50,000. So that's where your base year becomes super important, because in that base year, again, if you have spent $50,000 or if you have spent $10,000 in machinery and equipment in that base year, you have to go in above and beyond that $10,000 to get your credit. So you'd have to spend $20,000 to get the first $2,000 in tax credit, or you'd have to spend 60, not 50. And that applies for 2 years in a row. So if you have the $10,000 machinery purchase in your base year, then you have to spend the first $10,000 basically doesn't count towards your microenterprise tax credit. And if it takes you 2 years to spend that money, which is a possibility, I guess we didn't get into that. It can be a 2-year program, but you'd have to spend $10,000 in each of those next 2 years in order to take advantage of anything above and beyond that. So if you can keep your base year limited in those expenses, your assets, your repairs and equipment, advertising, lease investments. There's also a lot of tax planning that we can do around leases and signed leases because of the way that the calculations are for the net lease. If you're looking at leasing facilities, enter into a multi-year contract or something along that line is definitely a possibility. to utilize those funds, but that base year becomes important because you have to exceed, those expenditures have to exceed that base year.
I have to admit, the whole base year thing did trip me up a bit when I was learning about this program over the last few months. It can definitely be confusing. Awesome. Well, thanks a lot, Regina and Kim, for helping present, for everyone who asked questions and joined tonight. If you find yourself in the Antelope County area, I'm sure you could probably contact Regina and talk about it some more. We have REAP staff all over the state. Another shout out to them if you're in need of business assistance. Oh, we have a last question. Does the 5-employee max count as full-time equivalents?
Yes, that's basically 5 full-time equivalent employees. So whether you have 3 employees or 10 employees, as long as it really comes back to that 200 hours a week, 5 full-time equivalent employees.
Perfect. Awesome. Well, thanks again, everyone. I'll leave my contact information on the last slide if anyone has any questions. There's also the website address for the Department of Revenue guide for the tax credit. So you're welcome to take that down. Nothing else. Have a great evening, everyone. Thanks a lot.